From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon and welcome to the COB. My name is Carl Rodder. It's great to have your company on this Monday afternoon, the first day of the trading week, of course. And let's see where the market has finished up. Cash trade, shall we? The CBO 200, drum roll please, down a fraction, 0.17% for the session. Just a little bit of a give back after last week's very significant rally, and well, arguably it was some of that data out of China that rattled sentiment, although we were trading more or less sideways with perhaps a slight downward bias throughout the session. To the three themes of the day, and China's probably the big one, it has to be said. Disappointing growth numbers once again. China slowed down, coming in below expectations. Some signs of strength coming through in the fixed asset investment figures as well as industrial production figures, but overall still confirming that economic activity is weak in the Middle Kingdom and perhaps more stimulus is going to be required there. We will have a loan prime rate decision at the end of the week before a Politburo meeting not too far away, hopefully, that will signal more stimulus to come from the fiscal side as well. Slow off the mark, like I said, the week has started very quietly. Japan on a public holiday, Hong Kong's markets offline because of a typhoon. And last but not least, confession season, and we will be picking apart some of those corporate stories here locally, getting a lot of companies now trying to air the dirty laundry before they have to report in less than a month's time. But let's get to some of the areas of the market today that moved and shook. Miners to begin with, off and selling off around midday in particular. That's when the Chinese data hit their headlines and confirmed those weaker than expected GDP figures. So BHP, Rio Tinto, Fortescue Metals, all lower. At South 32, an outlier, but that's an energy name, and we'll look at the energy space now because it was also struggling overall today. Woodside Energy down, Santos as well. A few exceptions, Sol Pattinson, flat, Whitehaven Coal up 2.56%. We'll cover that story in just a moment, but out with a production update, worse than expected, but still investors seem to respond well to some solid sales figures. Last but not least, infotech stocks, a little mixed, but edged higher throughout the session. WiseTech Global back above $80 per share. Xero steady, Altium up. That's a big milestone there. And in fact, I think it might be around 5 cents from record highs, WiseTech Global. So there's nothing holding that stock back, it would seem, just at the moment. But let's get to some stock news now. And shares of Endeavour Group have slumped to a record low after the Victorian government unveiled reforms to impose tougher restrictions on poker machines in the state. Victoria gamblers will be forced to set binding limits on daily poker machine losses, while venues will be made to shut their gaming operations for at least 6 hours a day. Endeavour responding to the moves, saying it welcomed the opportunity to work closely with the government as they determined timelines and models for proposed changes. And in the banking space, NAB introduced new blocks on some cryptocurrency platforms where scams are more prevalent, halting millions in payments between March and July. It intervened in more than $270 million worth of customer payments, which raised scam concerns. New insights from the bank says 40% of Australians are extremely willing for payments to be slower if they were better protected from scammers. And we spoke about some of those confession season darlings, lack of a better word. Whitehaven Coal on the watch list. It posted a 20% drop in fourth quarter production. It was hit by operational laggards and weak performance at its Narrabri mine, though came in at the lower end of its full-year guidance. Looking ahead, the company is flagging volatility in metallurgical markets and is expected to continue for the remainder of 2023. And in other news, Rio Tinto is set to invest over $40 million in sovereign metals in exchange for an initial 15% stake in that company, with Sovereign to use the funds to advance its rutile graphite project in East Africa. And IGO is expecting to post a non-cash impairment charge of up to $980 million in fiscal 2023, though says it won't impact full-year earnings. It comes after a review of its assets acquired from its buyout of nickel producer Western Areas in 2022. This as it withdraws previous guidance for its Cosmos project in Western Australia on the back of challenges to the mine's production schedule and delays in development. And last but not least, MMA Offshore updating its outlook, forecasting strong earnings growth for full year 2023, tipping EBITDA to be between $66 and $68 million, with positive market conditions expected to continue into FY24. So some of those shares, where do they finish up? There you go. Whitehaven Coal higher, Rio Tinto dipping. That might have been the China news. IGO clawing back early losses, but still down by 4.2%. And MMA Offshore up by 4.26%. So let's get to our stock of the day. And it was Endeavour off the back of that regulatory news. We had Gaurav Sodhi and Masan Somasundaram speaking with David Koch about their view on Endeavour.
High in the second half of the year.
Yep.
And with interest rates, I think despite the change, we're probably going to be probably hike and then hold. And that's going to be flowing through the economy as well. So all of these things, the consumer spending is going to be tough. So I'm not jumping into Endeavour, but damn, it is good enough that I want to keep looking at it, and I just don't know where the bottom is. And I'm happy to say I don't know.
We specifically targeted that part of the business and said there is regulation risk here and we do not think it is being adequately priced by the market. Well, that regulation risk came to pass, and yes, and I think this is going to be a wholesale repricing of the entire business. I think we're going to see permanently lower multiples until growth resumes again. And I think that's entirely appropriate. I think the price before was wrong, and I think the price now is probably more reflective of the multiples that this business ought to trade at, which is much lower, I think, than was the case in the past. So I don't think this is necessarily a buying opportunity. I still think it's a sell, even though it's fallen a long way.
Right.
But I think there will be a time to come back and look at this, but it is too early.
Okay, so not an emphatic call there either way on Endeavour, other than to say that perhaps, while this risk was mispriced in the market, Martin there potentially saying that, well, you might like to look at the stock here. But nevertheless, it's not a buy, won't be going to the investment committee Endeavour Group. But let's get a wrap on the day now, and I'd like to welcome to the COB Hebe Chen from IG Australia. Hebe, thanks for dropping by today, really appreciate it. Looks like a fairly quiet start to the week. The market down just a fraction.
Good afternoon, Carl. Yes, that's right. It's a quiet as well as a bit of cloudy day in the Asian market today. As you mentioned, the two market was closed today, the Japan and the Hong Kong market. But apart from that, most of the Asian markets sort of thinking a bit softer to start the week. I think two key main reasons, drivers behind this. One is that the sort of following what happened in the US market on Friday is showing that it's sort of like a rally for the past week, which was pretty strong last week, appears to lose its steam towards the end of the week, despite that the banking sector has reported quite a impressive earnings, but it's sort of like a risk appetite getting a bit weakening towards the end of the week. So that has definitely impacting the Asian market as to start a new week, as well as the China's data, as you just covering up the China's has reported a big bag of the data today, especially the Q2 GDP sort of missed the expectation in a quite wide range, the 6.2 versus the 7.3%. Apart from that, I think there's also a lot of things we can look at into the Chinese economy that's showing that the confidence is still pretty weak for China's economy's outlook.
Yeah, well, let's get into that data now, because again, it seemed to rattle investors just a little bit, especially those cyclicals around the middle of the day. So what was your take from the Chinese economic data dump?
Well, I think today's data, plus together with what we have showing in the weekend about the property price showing a no change from the previous year, sort of painting a quite comprehensive picture about answering the question, what is going on in the Chinese economy. If I have to summary up, I think there's two key takeaways. One is the domestic demand is definitely pretty weak, which you can tell from a zero inflation rate as well as a retail sales data sort of under them expected today. It's 3.8% growth from last year, but we don't forget that the comparison benchmark is to the last year when most of the major cities were in lockdown or partial lockdown. So 3.8% is definitely not a big number to celebrate for. Apart from that, I think a deeper issue for the Chinese economy is about the confidence. It's about whether either the household or the business or the investor do have the confidence for the economy. I think the answer is definitely pretty not positive. If you're looking for the property prices not changing, it's not even growing. The fixed asset investments under them estimated, as well as the industrial production. So it looks like not only the domestic demand is pretty low, as well as the confidence, the whole economy, the whole market having the confidence for China's economy is also pretty low as well. So more likely, if you're looking forward into the next remaining of the year, I think one of the only silver lining is that we can see that China potentially will meet the yearly target for 5% by the end of this year. But I think the market will be not just focusing what's happening in 2023, but what's next after this.
Yeah, without a doubt. And again, like you said, it seems to be that confidence issue in the Chinese economy right now. What about the week ahead? A lot of macro data, and I mean, US earnings season is really picking up now.
Yes. We already have the banking kick off the earnings seasons. We're having a couple of the banks will report on today or tomorrow, including the Bank of America, also as well as the Goldman Sachs as well. But I believe the market will be quite likely focused on the midweek. We're having Netflix as well as Tesla. I think one of the things in common to checking the earnings is about the profitability. As we know that Netflix profitability dropping about 18% last earnings. So we will see how the company potentially will fix the issue there. And Tesla is a big issue as well, as we know that Tesla has been running through a couple of the price reduction from last year to this year. So it definitely have a big impact on the profitability as well. Apart from earnings seasons, I think for the Aussie market, the unemployment rate will be a big watch on Thursday. We're expecting a 3.6%, but I think any number higher than that will further cooling down the expectation for further rate hike by RBA, which is already on the downtrend from previous week. Apart from that, I think globally the inflation will be a key talking point. So we're having the inflation from UK as well as Japan and New Zealand. So they will sort of attract the eyeballs for the market this week.
Yeah, it's going to be another exciting one. Never rest for the wicked. And Hebe, really appreciate you providing some insights on it. Have a wonderful week. We'll talk soon. Hebe Chen from RG Australia.
You too. Thank you.
Okay, let's get to the leaders and laggards now, shall we? Starting off with those leaders. Medibank Private up 4% today. I can't say that there's necessarily been that much news, at least that I've been aware of, but we have seen that stock beaten down just a little bit, especially after regulators stepped in and demanded that it put aside that additional capital to cover some of the possible expenses related to that cyber attack that it had last year. But anyway, it's up 4%. Home Consortium, Credit Corp, Net Wealth bouncing back after a sell-off on Friday. Some broker downgrades after it provided a quarterly update. They're trying to find its feet. Laggards now, Endeavour Group, stock of the day, down 10%. Already gone through the news, but regulatory risk there clearly going to hit profits going forward. Imugene, always a wild ride, down 6%. Sayona Mining, IGO and Paladin Energy, a bit of a resource play. We did see materials, the big laggard on the market today, but IGO reporting a non-cash impairment, another victim of confession season. So the investors selling that stock, although it did pull back from, or bounce I should say, from the lows of the day. Let's get to the small cap leaders and laggards, if we may. Let's just quickly peruse if there's anything there. Nothing too much. Drone Shield out with another update today, in fact, up by 17.8%. I believe it was around a contract that the company has won. Let's go to the laggards now in the small cap space. And, well, there you can see nothing that really jumps off the screen. But if you're in it, well, I'm sorry to say, it's been a tough day for you. The side of Nick, Alltech Battery, Brockman Mining, Magnus Energy Tech, PYC Therapeutics, the laggards when it comes to the small caps. Okie dokie, let's quickly run through what is on overnight. A little bit of, well, I suppose politics to take care of. G20 meetings are being run. We also have the Empire State Manufacturing Index. Some of those figures in the United States coming in very weak recently, and well, that two-speed economy between the manufacturing sector and services sector persisting perhaps. We'll get the latest read when it comes to the Empire State Manufacturing Index, obviously just applying to New York State there. Also, in the, night and week ahead, we've got a bit of earnings on. I thought I would provide this as a bit of a snapshot as to what's coming up this week. A deluge of companies, including, Tesla and Netflix on Wednesday. That'll be Thursday morning our time. But tonight, we get First Bank reporting. Not too many, to be absolutely fair, but tomorrow night, again, we get another lot of US banks and financial institutions, including Bank of America, Charles Schwab, and Morgan Stanley handing down results. So we'll be keeping an eye out for that, especially any kind of positioning and chatter going into the event. Last but not least, let's have a look at what we do have coming up tomorrow. And the data docket is, fairly busy. We do have the RBA minutes coming out at 11:30, provide some colour on that decision earlier on in the month and, maybe frame somewhat what we can expect going ahead into this August decision. And also too, some corporate news. Sierra Resources is out with a production update. We also get some quarterly reports out there, Hub amongst them, Hub 24 amongst them. Okay, let's see if we can get one final check on the local market. I will let you know where the ASX 200 has closed. There you go, the CBO 200 index down by 0.15%. The ASX 200 off by a slightly smaller margin and marking a little bit of a rally in the aftermarket option, finishing the day's trade down 0.06% and at 72.99. So, we'll call it even for the day. There you go. That's the intraday price action, fairly choppy throughout. That does do it for the COB. Remember, you can catch up on all the news and interviews throughout the day. We'll see you tomorrow morning. Have a lovely evening.